Hi, in this video I'll be sharing with you exactly how I made this trade entry and the entire analysis to the entry. So first of all, remember our checklist. First is for us to determine the trend of the market. So once we get the trend, the second thing we want to do is for us to get a POI. What is POI? POI is point of interest. Is that zone we want to make our trade entry. The third thing we want to get is for us to have what? A pullback, right? We want to have a pullback into the point of interest. Then once we have that pullback, we want to get what? Entry confirmation. So we need entry confirmation to make our entry, and then the fifth thing we do is for us to make our entry. So let's look at all of this, the trend, to the point of interest, to the pullback, and then the entry confirmation. So I come to my 1 hour time frame and I realize that price has been bearish, meaning the price has been selling. And once I established this, what I did was simple. I moved from this time frame to my 15-minute time frame. When I come to my 15-minute time frame, I quickly identify my structural point. So here are the structural points that I identify. I have this lower high, I have this lower low, I have this lower high, and I have this particular lower low. So the downtrend continue. Now I want to identify my point of interest. So first, one of my point of interest is my order block. Now after identifying this particular order block, from this order block I realize there is also an imbalance on this 15 minute. Imbalance is a fair value gap. So on this 15 minute, I am having this imbalance here, right? So here is a fair value gap. So here my point of interest first is this order block, right? The second is this fair value gap, okay? And then the third one is smart money cube. I call it SMC, the smart money cube. So this bearish candle you are seeing, this bullish candle is a smart money cube. This gap here is a fair value gap. It is an imbalance, improper price action. Then this is my order block. Now you are wondering, what is an order block? Remember, this is my structural point. So I had my lower high, I had my lower low, okay, lower low, lower high, I had a new lower high, I had a new lower low, I had a lower high, and I had a lower low. So what I did was very simple. At every structural point in a downtrend, the last bullish candle at that structural point before price move to the downside is what we refer to as what? As our order block. So this order block is this last candle you are seeing, this bullish candle, this particular one, before this move to the downside, okay? That is what we are referring to as our order block. So this is our bearish order block, this last bullish candle, not a bearish candle but a bullish candle. This particular one, this last bullish candle before this move to the downside is what we are referring to as our order block. So we now had this order block. Then after that, we had this fair value gap. So this fair value gap, I've explained it on this channel before, and if you want me to explain how you can identify this, because of its technicality, it will require a single video. You can indicate in the comment section. So this is a fair value gap. It is an imbalance or an improper price action. Then after that, if you observe carefully, this is a bearish candle, this is a bearish candle, then suddenly we had this bullish candle. Then after this bullish candle, we now had bearish candle, bearish candle, bearish candle, bearish candle. So when you had an opposite candle in the middle of series of similar candle, we say series because if this was a bullish candle and then was a bearish candle, here you have bullish, and then you now went to have this, it will not be valid. So it has to be a series. It has to be similar candles. So once you get this, it is what we refer to as our own smart money cube. So this is a smart money cube. Now we have that smart money cube. We mark it as our point of interest. So look at what happened. Look at what happened. So if you look at this carefully, you will see it now. This is a lower high, lower low, lower high. Yeah. Lower low, lower high, then lower low. Now you will tell me that here is a break of structure. I agreed with you. This is a break of structure. But what I want to see is that even if this is a break of structure, price will still need to come to mitigate this other block for it to buy. However, this is not a break of structure because I am working with the 1 hour time frame. I determine my entry, my analysis, my trend on the 1 hour time frame. So I'm only here to make an entry. So price pull back into this smart money cube. So you see that? So when price pull into that smart money cube, what did I do? I wait to get a bearish candle signal. So when I had this first bearish candle, I was preparing, and then when I wait for this, it formed halfway, I have to come in with my sell, trade entry, and of course, I had my stop loss at this level. So this is how I made the entry. I was able to wait. So remember, we've determined the trend. We have our point of interest, mark out, order block, fair value gap, and smart money cube. So any of this will be our trade entry. So in this case, price pull into this. So maybe subsequently, this zone is still valid. This imbalance has not been filled, so maybe price will still come in, fill in it, or into this other block. Then, however, once I get this confirmation, I was able to make my trade. And then you have already discussed the entry confirmation. I mark this. I have to wait for pullback. So you see the pullback. That is the pullback into that zone. Right? So the trend, the point of interest, the pullback, the entry confirmation is this that you are seeing, this candle formation. And after that, what is the next thing? Entry. So you can see this entry and you can see how the trade is playing out. So this is how simple it works. I believe you have learned something new. Do not forget to like, share, subscribe, turn on your notification so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.